Singapore's non-oil domestic exports fell for the sixth straight month in March. Now that's as both electronics and non-electronics exports shrank. But the 8.3% contraction was smaller than economists had expected, and it was an improvement from February's 15.8% contraction. Exports of electronics fell by 22.3%, less than the previous month's 26.5% decline. And this was due to a drop in exports of integrated circuits, disc media products, and computer parts. Non-electronic exports slid by 4.7%. That's compared to the 12.4% contraction that we saw in February. And that was mostly due to a dip in petrochemicals and food preparations exports. March exports to most of the top markets fell as well, except the United States and South Korea. Lower export volumes to China, Taiwan and Malaysia also contributed to the NODX drop in March. But economists say that China's reopening should help propel Singapore's exports in the months ahead. But they caution that it could be lower than last year's performance.
With the reopening, demand within China would have picked up. So that demand would drive the manufacturing activity in China, and in turn drive this kind of indirect demands for Singapore's exports. Because China, at the end of the day, is Singapore's largest non-domestic export market, and we actually export a lot of high-end, electronics parts and components, petrochemical products over to China. So the demand in China actually is a very important factor.
On balance, we probably might find that the drag from the rest of the world will still be larger than the lift from China's side. So net, at best we can hope is China consumption recover much more significantly stronger in the second half for us to narrow our year-on-year decline to single digits from the current double-digit contraction. Yes, March is an exception, but we may see more month double-digit contraction on NODX in the coming month before we see it improve further towards the tail end of the year.